Hello. Welcome to my channel, my dear friends. My name is Avilas and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. And you can also subscribe to my channel if you also trade on other pairs like Euro USD, GBP USD and others. So let's get started. So this is the 1 hour chart of gold USD in front of us right now. And for the last 2 days, we have been discussing about the level of 1982. I was clearly mentioning that 1981, 82 was just a swing high, and we also discussed about the potential of market breaking the level and going up. So as per our expectation, we saw that market broke the resistance of 1981-82 and made a high of 1999. And after that, market saw some selling also, and right now market is trading at 1977. Overall, gold was very volatile yesterday, unlike the other pairs because of the Easter holidays. Most of the pairs were sleeping yesterday, but gold was very volatile. My dear friends, again I'll say that if you are a lover of gold, if you are a trader of gold, then please follow proper risk management because of geopolitical factors and many events. Gold is witnessing heavy volatility in the market right now. Please protect your hard-earned money. Please give respect to your capital. So this is the current market price, 1977. The first trading opportunity that may come to us is around 1972-71. Why this level is important? We have derived the level of 1971 to 72 from the Fibonacci 23.6% retracement, plus we also have the trend line. So trend line plus Fibonacci 23.6% retracement level makes this level a good one. So if there is no news in the market, then there is a possibility that once market will come down to 1971-72 level, market will bounce from here. So if market comes down to this level, observe the market first. Yes, observation is extremely important. After all, you must understand one thing very well, that's no level is permanent in the market. Therefore, confirmation is important. Confirmation is the insurance of traders. So once market comes down to this level, observe the market first and see how the market is reacting. If you see the market is taking support around 1971-72, if you see market forming hammer kind of a candlestick pattern, you get the confirmation that yes, this is a valid support and you can go for a buy. In case market breaks the level of 1971-72, if you see that there is a sudden selling pressure in the market has crossed the level of 1971-72, in that case, if you want to take a sell position, that's your personal opinion, but beginners, new traders, do not make the mistake. You try to go for a buy again around 1960 level. Around 1960 level, you have the second support. Why this is the second support? This second support because of this price rejection from below. Okay, here market previously witnessed heavy selling, and this was a kind of a trend reversal level. Okay, so as because of this price rejection from below trend reversal level, we can expect that this level will still be acting as the second support for the market around 1960. So 1960 is the second support. So in case market breaks the level, you need to keep your eyes on this level. And moreover, we also have the 200 moving average coming up. Listen to me carefully. 200 moving average coming up, you can see here. So by the time market reaches this level, hopefully the 200 moving average will also be around this level. ध्यान से सुनिएगा. So 1960 not only will have the support, but it will also have the 200 moving average as support, plus around 1957-58 we also have the Fibonacci 38.2% retracement level. So we have three factors here, combination of three factors here that makes this particular level of 1960, 1958, 57 a very beautiful, lucrative support for the market. So 1970, 172 is not that very strong support, okay, but overall we can hope that market may bounce. If market fails to bounce from there, 1960, 58 to 1960 can be a good level for a support. Okay, so if market bounces from here, you can definitely go for a buy. And the third support for gold right now is 1950. Okay, 1949 to 1950 level. This is the last support as of now for the market. This level is important because previously this was the resistance for the market, and right now acting as the support for the market. R is equal to S. And in the form of resistance, sorry about this, let me write again. 1999 to 2000, there's a resistance in the market. I have already discussed couple of times that these round figures always act as psychological support and resistance in the market. But if we consider the overall trend of the market, okay, again this is just the swing high. Yes, this is market has come down from this level, but overall if you look at the trend of the market, if you consider the events, inflation, geopolitical factors, then all the factors are pointing towards an upside of gold, overall upside of gold. Okay, not for intraday purpose, I'm not saying for day trading purpose. If we consider the inflation, the global inflation, then the war between Russia and Ukraine, Russia threatening Sweden and Finland, okay, see all the factors are pointing towards an upside on gold right now. So there is a good possibility that gold will continue the uptrend and it may break the level of 1999 or 2000. So by today or tomorrow, okay, if gold breaks this swing high also, do not be surprised, because after all gold is bullish right now and we must understand it very well. Okay, until and unless we get any news regarding the gold, okay, the gold chart XAUUSD will remain bullish, both fundamentally and technically. Therefore, if you are a swing trader or if you are a positional trader, yes, if you are a swing trader or positional trader, it is better for you to be on the buy side only. Do not take a sell position and sit idly. Many of you have taken sell position, then please come out of the trade, because gold has still more upside to it. For day trading, you can take a sell position, that's a different chapter, but otherwise, gold is an upside right now. We cannot deny the fact that. So, this is it. Hopefully, you understood. Bye bye. Take care.